right, welcome to the Freemium Podcast. Today on the house, we got Rob Farrar, Andre Laurin.
Yes, sir.
He's a junior.
Of Andre Laurin Jr. of Fidelis Insurance. And
Hello.
welcome to the podcast, guys.
Thank you for inviting us.
These guys are two insurance brokers. Today's going to be an insurance broker podcast. And because I remember last time, actually, I hit you guys up. You sent me an email, I don't know, 5-6 months ago after the pod with Rob, before or after, I don't remember. But like, hey, man, if ever you guys want to come back on, let us know. And so I hit you guys up again.
And here we are.
Very happy.
Today's been a content week. It's my third podcast of the week this week. So it's like, you bang them
Best
out
for last.
Yeah, save the best for last, baby.
Well, he's looking sharp.
I'm trying my best. Got the hair flowing.
The flow is nice.
How are you guys doing? How's everything?
Good.
Yeah?
Good. It was good first 6 months. I mean, the market is still very hard out there, but no, we're still able to pick up some new business, and retention is also pretty good. So no, can't complain so far. The end of the year, the last stretch is coming up, so that's going to be a hard one too.
Do you guys want to dive in? Because we got a couple topics I want to cover today. We can kind of touch more on the personal line side. Andre, I know that's kind of more your area. We could talk about commercial first. We could talk about a broader overview.
Yeah.
Anything in particular you guys want to, whatever?
Whatever
cool.
you want.
Let's guide it out. So
Perfect.
okay, so right now in personal lines, so I'll just speak from experience right now, and this is from like speaking to other insurance brokers as well. Do you find right now that you're having a difficult time with the maintenance ratio? So maintenance ratio for the viewers, insurance viewers, because I know no one else can be watching this podcast except for insurance people.
What do you mean?
So
People aren't excited about that?
So maintenance ratio, it's basically like, are you increasing in units or are you decreasing in policy units? So like, are you having trouble with that this year? Are you under 100?
Yes.
Yeah, definitely.
You are, right?
I mean, the premium, the increase in premium is definitely stable, going up.
Yep.
We're definitely seeing some good growth, but in terms of unit, I mean, we could definitely see there's a huge. It's definitely relatable to what's going on in the economy right now. So we're not in a recession, but pretty close to it. And I think it makes people with the inflation, with how much you're paying at the grocery store. So I think it just makes people shop a lot their insurance companies, their renewal, and then, we see that there's a lot of shopping. People switch without even calling us. They're just basically they're looking at their insurance renewal, and then they start shopping right after it. So, yeah.
Outside of the economy, though, because it's like I keep trying to no one has the exact reason for why the maintenance is going under 100, but I feel like, yes, I agree with you, like the economy is going down. But outside of that, is it, like, this is my theory, I don't know if it's right, people have less money right now. A lot of people are strapped. A lot of people are stressed about their mortgages and their mortgage renewals. Like, you can see it. People are talking about it. People are stressed with money. And there are clearly fewer new car sales.
Yeah.
And my main theory is that because there's new car sales, in Quebec at least, a lot of times when people get new cars, they shop their car insurance. And it's often that they'll switch. Like, we have we have double the amount of midterm cancellations as we do at renewal cancellations. And it's been like this for years. That's a mix of people that just sell their cars, they don't get new ones, and people that buy a new car and they end up switching. So my theory is that because there's fewer new car sales, there's just less activity in the market for car insurance. There's few new home transactions as well. Less people are buying, like, everyone's stuck in their house. There's a lot less transactions. My theory is also, to add on top of what you're saying, like, the economy is going down, but my theory is that there's just less transactions going on, which means fewer people are shopping. Yes, people still want to save money on their insurance, but there's just overall, the main point, there's just overall fewer transactions going on right now in the market, which is causing less people to shop their insurance. That's my theory, at least. Because if you look at all the personal lines brokers, they're all under 100 maintenance, like all of them.
Yeah, I mean, I think it's that, and I think it's also there's a lot of variables when it comes to people and their finances. It's easy to save money on your car insurance if you're willing to take the time. I think there's so many big insurers out there that are doing a big push, right?
Well, I'm just going to ask you, just put a little bit in front there. Yeah, there you go. The
that
closer you talk to it, the sexier your voice is going to sound.
Sorry.
Yeah, go ahead. Continue. Sorry.
So yeah, I think a lot more people are shopping. Like honestly, I think more people are shopping their renewals than before. I think you were able to get away with a 15% increase. Maybe get away is not the right word. I mean, it sounds like you're trying to, but I think you were able to push those increases more than you can now. And the reason is people are seeing those fixed costs go up that they can't really, your groceries, you got to do your groceries every week.
Yeah.
Those prices are going up. But then the car insurance comes in or the home insurance comes in, they're saying, you know what, maybe this is a place where I can save. Some people's salaries are fixed, so they're not able to, tighten up their shoes and go, add 30% growth on their paycheck. It's just not possible. So unfortunately, that's what you got to do is look at other avenues to bring those costs down. And I think
No, exactly. If they're,
Do you think it's going to be like this next year?
oh yeah,
I do,
for
yeah.
sure.
I think
for
it
sure.
could,
I think so,
I
too.
think it's going to continue
Maybe even
for
a
at
little
least 2024, and maybe going to start readjustment maybe in 2025. But I mean, when the real change, maybe in 2 years, honestly.
I agree.
Yeah.
I agree. It's like right now, it's just, even last year. So last year, and we have 6 salespeople in our office, 6 like full-time salespeople. They're it's not like they're sitting there twiddling their thumbs.
No.
They're selling.
Yeah.
They're bringing in 40, 50, 60. Some of them, like one guy, he brought in $90,000 new business, personal lines. They're selling. And even at
That's
that,
great.
I feel like, but it gets frustrating from a personal lines perspective where you're selling. It's like a hamster wheel.
Yeah,
So it's like 3
exactly.
steps forward and 2 steps back.
Yeah,
And it gets very frustrating for myself, for the management as well, just to actually look at the growth. You have a kick-ass month in sales, and then you look at the numbers, you're like, what the fuck?
how many renewals did I lose?
What
Yeah,
happened?
you're like, what the fuck?
Yeah.
Yeah.
So it's like, is this the game? I think this is the game.
Well, I think it's a little bit more of a shift now and taking care of those renewals a little bit more than maybe we used to. Once again, I know like it's a harsh reality, but we would say, okay, well, this is the increases we're going to pass, and we're sticking to that and moving. Whereas now, maybe you kind of have to take a little bit of an old school approach where it's just be a little bit more caring to those renewals.
If I compare to other brokers firm, I mean, you have a structure in place to actually grow, to get new businesses. We're definitely working on that in commercial and personal lines, but there's a lot of brokerage out there that don't have a structure. They're basically maintaining their volume years after years after years.
But most have that model.
Exactly. Yeah. So, I mean, at this point, I'd be a little bit scared if I would have any
no
new
growth
business,
model in place. I mean, man, that's scary. Honestly,
for
that's
sure.
scary because you're just going to start to see that.
Yeah, especially this year. If let's say you wouldn't have any new business model like structure in place, what would you do? You'd look at your numbers. You're already pissed. Bringing in $90,000, let's say, per month of new business, but you're pissed off because you see the global numbers and you see that the retention is going down, the units are going down. So imagine if you take that part away, you'd be.
Do you think
definitely be a lot more pissed?
I wouldn't be a happy camper.
No.
Do you think this is going to lead because contingence, the profit sharing check, profit sharing, it's a check, the profit sharing deposit, that something just happened to my microphone. Never mind, we're back. I was like the bar. Remember
like
the
nothing
Simpsons
happened.
episode, the bar? Oh, my heart stopped. There it goes. My character. Do you think this is going to lead? So, if the maintenance ratio is under 95, like the profit sharing amount you get drops off a cliff. So it can go from about, let's say, 30% of the profits to down to 13. Because I was looking at this the other day. You guys probably don't know the numbers off the top of your head. That's what it is. Do you think, so overall, or to simplify this, that means there's going to be a smaller check at the end of the year for brokers who aren't bringing in new business and who have a maintenance ratio under 95. There's going to be overall less revenue for the cabinet. Do you think this is going to increase the amount of acquisitions that are already going on? Like there are a lot of mergers and acquisitions going on. Do you think this is going to add pressure to that?
Yes.
You do?
Yeah.
Yeah, because I mean, I think maybe some people were already considering whether it's just retirement and selling. I mean, the baby boomers are nearing the end of their career and they're looking for their exit, right? So once you start to see more hardship and maybe not a way out of it, right, it pushes you to saying, you know what, I'm tired. I'm ready to call it in. Call up a rep or whatever and say, hey, you know what, find me someone to sell to.
And
Instead of putting in the work that it's going to take to shift that.
What if, but for the selling right now, so even in insurance, speaking from personal experience, they've shifted from the growth model, growth at all costs, to what's your profit. And I think a lot of owners who don't have good profit margins are going to be in for a rude awakening when they go to market and ask for money. They're going to go, well, you know, we've been growing by 15% over the past couple of years. I want to sell this. Everyone just thinks right off the top of the bat that it's, you know, minimum 4 times commission. If you don't have profit, I don't think the market's giving 4 times commission anymore.
I think that's a correction that needed to be made. Honestly, I mean, you're seeing it. Well, look what happened in Silicon Valley, you know, with all those companies. I mean, there's no money anymore, and companies are getting devalued like crazy.
The market wants profits.
Yeah, they want to. There's a correction that needs to happen. Too much free money. Money is not free anymore. I want to see like if you know how to make money.
And it's cool because like the I don't know. I'm always interested. We're already at the mergers and acquisition stage. It's a very interesting model, just because it's a private equity model. They come, they buy, they synergize. Like the big Virage brokers, the big Broker Links, the big Westlands, like all these guys. You know, it's no secret that they're buying
market share.
Whenever there's someone for sale. They're most likely going to make a bid on that brokerage.
Yeah.
And it's an interesting model because they have their margins. So it's basically like a 30% EBITDA margin on the minimum. They go in, they buy it, they synergize, and then that's it. But they don't really, even them, their maintenance outside of acquisitions, their maintenance is under 100%, is under 100 as well. And I don't know. It's like, I don't know where I'm really going with this. It's just to say it's like they're the only ones now who can compete because they actually have the cash, and the brokers who have been investing in growth and who don't really have cash. I'm basically speaking from experience.
No liquidity.
There's no liquidity, and to go get loans. A bank will not give you a loan. No fucking chance.
The doors are closed right now.
Yeah,
No.
unless you have like 3 years of running at like a 30% margin, they're not giving you any money.
And even if they do, what does that look like?
I don't think they even would. They're not even going to entertain it. No. I mean, they're scared enough with their balance sheets with mortgages and everything going on. Like, dude, they're fucking scared. Like they won't say it out loud, but their loss provisions moving forward and stuff like that for how much money they're actually going to lose moving forward. They know there's a storm coming. Everyone knows that.
Yeah.
So if we go and try here, I think this is what the point I'm trying to make. It's basically for the mergers and acquisitions scene, it cuts out a big pile of the market because a lot of brokers don't have access to capital to go make these acquisitions. And the guys like the Westlands, the Broker Links, the Virage, they do still have access to capital because they've been running at high margins for years and years and years. And I think there's something to be said about that. Like their growth.
There's less competition. Sorry to cut you off.
No, go ahead.
There's less competition in those acquisitions. I mean, you kind of control your price too, right?
Yes.
Which, you know, if
it's
you're
not
seeing
good for a
5x,
seller.
you're seeing 6, whatever the multiplier is. I mean, it varies, right? But it's not good for the seller, that's for sure.
No.
But I still do think there's going to be sellers because you still have a market there of brokerages out there that are at a certain age. Maybe they don't have a retirement plan in-house, or there's no money there to buy the seller out. Yeah, I mean, I still think there's going to be sellers. It's just, in terms of the buyers.
For sure. It's what I've seen in my previous life and when I was on the insurance side and what I'm still hearing. It's even like young owners, I would say like around 45, they're already thinking about selling because they're tired of not only the administration work, but what's going on in the market. And it makes them want to sell a lot quicker, a lot faster than traditionally when you're 60 or 65 years old owner, and they're like, okay, well, now it's over. I want to sell it. So I mean, going back to what we were saying previously, it's like when you don't have a structure in place and you've been very on the traditional side of the insurance broker, like 20 years ago, everything was, working a certain way. And I see that like a lot of brokers firms right now are not evolving. They're not following the trends. They're not following social media. They're not following campaign, Google ads, all that stuff. It's always been working for them. So why would they change? But then you have to adapt.
They're waiting for business to come to them.
Exactly.
Yeah, it's all referral based. But
Yeah.
how do you forecast referrals?
You don't.
You don't.
And I think
You
also
really
too
don't.
from like the growth side of things. If I think just to add to your point, I think, especially if you're a commercial broker, I mean, going through the hard market a couple of years ago, your premiums went up 25, 30, 35% without you having to do anything because a lot of the renewals were going up 30, 40, 50, double. Like this was just the market and the clients were shopping. That was the price.
Yeah.
So a lot of brokers got spoiled with that. And you can't really blame them if you're sitting there and you're not doing anything different and your cabinet just grew by 30%, you're pretty happy. But right now, no one's growing. And a lot of people, if they have that same mentality and they're not bringing in new business, they're going to be shrinking.
Yeah.
So I think that's another reason adding to the pressure or adding just to the thoughts for them to go, hey, you know what? I'm not growing right now. I don't have the energy to go out and hire some people, some salespeople. It's very difficult to hire right now. Fuck this. I'm out of here. I'm going to sell.
Yeah.
But just back to the point I mentioned earlier, when they're going to sell, because especially if they've had growth, I'm not saying this properly. If they don't have proper margins, they're not going to get a good offer on their book right now.
No, but that's going back to like the traditional broker that was just basing his selling intention on multiples.
Yes.
So it's like, how can I should be... It was selling at 2 back 20 years ago.
Yeah.
Why can I sell for like 5?
Yeah.
It's been 20 years. I got good loss ratio. I got good growth, let's say. But they don't realize that like the profit side of it, it's very important.
Yes.
A lot. If you're looking into the details, you're definitely like looking into that and you're asking about it. And then since you've always been more on the traditional side and like more on the multiple side, sometimes you're not even able to answer these types of questions,
Well,
So-
it's all this to say.
It's such an important question. I mean, it's when you think about it as an entrepreneur, it's like, what are we doing? We're here to. It's like the harsh reality is like we're here to make money. Like,
And if you're not, and again, I'll speak from experience without going into like all the details. If you don't have a brokerage right now that's operating, I'd say at minimum 25% growth year over year, and you don't have profits, you're going to be very disappointed in the multiples that are going to be offered to you from outside bidders. It's not going to be a good multiple. Like if you have, let's say if you have 5% growth and no profit,
5%.
you're fucked.
No.
You're not getting anything.
No, and to add to that, it's like, let's say we're in a business that we're in a sector that like the insurance companies are actually could help you out with this.
Yes.
And I'm not saying that the bank, BMO, or any other banks
CIBC,
cannot help
whatever,
you,
yeah.
CIBC.
Yeah.
But it's just, I think from my understanding and my perspective that the insurance companies, they know, they have a lot of experience. They have a lot of targets. And by targets, I mean, they have like a lot of brokers that know that they want to sell or buy, so they could either introduce you or they could do the step and they will understand the math behind it.
They know they know the word on the street.
Exactly.
Like they know who's
and
interested in buying, who's interested in selling. They know everything.
And I'm not saying like banks don't understand this, but I mean in terms of being creative,
No, it's not there at all.
it's not there.
No.
I mean the banks will understand the math. They'll play ball, but I mean, I think it could be like a lot more advantages for you to play ball with, let's say, like an insurance company. I mean, it could be more advantage. And
Okay, but let's play. Okay, so you're basically saying I'm gonna take the devil's advocate point.
Okay.
So you're saying that right now, if you want to grow starting up, and we're both insurance brokers there's an insurance company that has an equity stake in our business. We did this for capital to start a business. Okay. Me, it was a little bit different reason. I'm not going to get into the details, but I'll play the devil's advocate here. You're saying that, it's a good thing to partner with an insurance company. They're going to give you access to capital. They come with, there's a lot of pros, and there is a lot of pros to working with an insurance company. There is. What do you say to the guys that get short squeezed by the insurance company? What do you say to the guys where they lose a lot of control of their insurance broker from the insurance company? And in Quebec, it's a little bit different because the insurance companies can only own up to 20% of the voting shares and 50% of the participating shares in the company. So they can't own, let's call it 50%. They can't own more. In Ontario, doesn't matter. BrokerLink is 100% owned by Intact.
Yes.
And
I mean, I think
what do you say to the people? And this is very prevalent in Ontario. The brokers there, a lot of them, do not trust the insurance companies when it comes to them taking an equity stake in the brokerage. They don't.
When it comes to taking equity stake, okay.
They want to keep their independence. The brokerage network in Ontario, the majority of them are not down with insurance companies having an equity stake
in their business.
What do you have to say to that? And I think
it's tough.
I think it's because they don't want to relinquish control. Do you think that these people can compete against a brokerage like BrokerLink or a brokerage like McDougall? McDougall is 70% owned by Economical, I think now. Do you think that they're able to compete against these guys?
Well, I'd go to like the base. So like to start up. Let's say we're brand new brokers, me and you, all of us, we're starting. And I mean, it just depends. Like it really depends on like where you want to go and where you want to bring this business, because there's honestly, if you just want to like grow and to a certain level and to keep yourself as a small brokerage, I don't even think you need an insurance companies. I mean, you need their contracts, but like, will you ever, if you don't want to make
financing,
in terms of financing, will you ever want to make an acquisition, or do you want to grow X amount per year? So, I mean, it all really depends on like what you want to do. And if I put it in our case, like, let's say we definitely have like, well, hopefully we have like 15, 20 years, 25 years to go. Yeah. So, I mean, we're not here just to maintain. So we want to grow.
You're here to grow, baby.
Exactly. And I mean, like our main growth, like our main growth structure right now is basically like we're definitely growing organically. So do we need insurance companies for that? It's debatable. If we're going to like
if we're growing organically, no, you don't need it.
No, it always depends. If you need some financing to, like, you have a really great idea and you want to put like $100,000, you really want to go fast and you want to grow and you need financing. I mean, in that situation, I think you could go see a bank, you could go see an insurance companies. I think it'll come up to the same thing. If I'm not mistaken.
Would disagree on that, just because, from our experience, I can only speak on our experience. I mean, dealing with the banks was very difficult.
Especially when you're young. Can we talk about your experience? Whatever you guys want to talk about.
No, I mean, look, whatever. I mean, it's just we obviously, at the beginning we went to the banks and we tried to do deals with the banks.
When you were trying to start up Fidelis Insurance.
Yeah, when we had some 2 acquisitions that were ready to be made. I mean,
this is 2 years ago.
Yeah,
about
2 years.
Yeah,
ago.
21.
2 and some bit. Yeah,
2021.
Okay.
And yeah, of course. I mean, the first thing we wanted to do was go to the bank, right? I mean, so let's go let's see what we can get from them and how they value this and go from there. I mean, to be honest with you,
went nowhere.
5-minute meetings,
They weren't offering
this
much.
is how much we need, and they said, okay, well, you got to put up basically 60% of it. I said, I'm 30 years old. Like I don't have that. So it was very the meetings that we had, it just felt like there was no wiggle room there. And when we started to speak with insurance companies, I mean, you could tell they saw past that initial, okay, well, you don't have the cash to do this.
Yeah.
They saw 10, 15, 20 years down the line. And that's kind of what we needed someone to do, to be honest with you.
Yeah.
Yes. Because the insurance company, they act as private equity, essentially. Do you think you would have gotten the loan from the insurance company? We won't mention their name. So the insurance company has an equity stake in your business. Do you think you would have gotten a loan if you're starting out from zero and it was going to be all organic, all sales? Do you think you would have gotten a loan if it wasn't to acquire another brokerage in order to start? Because like that was a good play, by the way, because you guys, there was a book of business.
Yeah.
You purchased the book of business. The insurance company helped you purchase the book of business. They took an equity stake in your business as well. But that gave you a nice base of cash flow.
Correct.
Yeah. You had money coming in. And you're like, okay, cool. We have recurring revenue.
We weren't starting
now.
from zero.
Do you think you would have gotten a loan if you were starting with zero assets,
I'll
zero
even
clients?
go a little like I don't even think we would have got a contract.
Really?
Yeah, it was at that point.
That's a good
like
point.
many insurance companies, when I reached out to them, because I knew that we were buying, so we had a volume in place. So reaching out to them, they were just laughing at me sometimes. It'd be like,
It's like our meetings
well,
with the
you
bank.
have you have like less than $100,000 with us volume wise. So I mean, you should just. I'm not going to give you a contract. You just transfer everything at renewal.
Well,
So
it's like, yeah,
even
no, of course we don't-
even with renewal, even with like a small amount of $100,000 volume, they were telling us like we won't give you a contract. So imagine going from zero. I think I don't even know if we would have got any contracts.
Yeah, you're stuck going
so
through a banner.
going to loans, it's going
And then
to
that brings it a whole other problems.
Yeah.
You know, so
Because what this creates, though, because there's like the current barriers to entry.
Yeah.
So we have industry barriers to entry.
Yeah.
Then you have outside barriers to entry. There's just red tape, regulation, the AMF.
Yeah.
I mean, it's just very difficult to start a business.
Yeah.
So it's just sad. 50 years ago, you didn't have to go through all this. You can get a contract. You can call an insurance company up. If you came with 10 years, my grandfather did this to start this company. He had experience in insurance. I think it was 10 years experience. Started up his own shop, took a phone book, cold called people, got a contract, a couple contracts.
Built up a book.
He was good to go. He didn't have to deal with the AMF. He didn't have to deal with the insurance companies. He didn't have to deal with the bank. He was literally in his, you eat what you kill. Whatever sale he made, that was the money that came in. You can't do that anymore today. You can't, because you can't get a loan from a bank.
no.
If you don't start off, if you're starting from zero and you don't start with existing volume, you can't get a contract. You can't get a loan either if you want to go hire people to sell. You're literally by yourself. Like,
No, it's very, very hard. And
I think it's next to impossible. Unless you're,
unless you're going through a banner.
unless you're going through a banner, or I think, and again, I've never done this, I feel like if you were a big commercial player, like big market, mid to big market,
Now
like
you're saying like you were working at a firm,
like a guy
brokerage
from
firm?
Marsh, like
Okay,
a
and then-
sharpshooter
and
from
that person
Marsh.
wants to
Fuck
open
this,
their
I'm out of
own.
here.
Yeah,
I'm
yeah.
starting my own thing, and he's like, I don't need financing because I got like 6 accounts that are all
Yeah.
500
Yeah, I
grand
know,
each.
But now
that
he's got
all-
to deal with his. You think Marsh is just going to say, "Yeah, no problem. Take your client, start your own book." I mean, he's going to have to deal
That's
with
a
some
good
legal
point, too.
ramifications on that as well, right?
That's a good point too.
Maybe they're not going
But
to
it
do
takes, but you could also, I think, like kind of you just take the BFL play. By the time it gets to court for the non-compete clause, you're a year and a half, 2 years down the line. You have your cash coming in. You worry about that later.
You're taking a risk.
I'm not saying you're not.
Yeah, you're taking
But
a
I'm just
risk
saying,
there.
like, I'm just trying to come up with scenarios where how the fuck do you
Do
start
you
an
get into
insurance
this
brokerage without having companies have an equity stake in your business right away? And I don't really see a way around it.
or even what I've seen, even when you have
And sorry to cut you off.
haven't-
I like talking about this. Just
I think
because,
there's
like,
a way. There
okay,
is a
I want to
way.
hear. I want to hear this, and just for the viewers and the insurance brokers out there, because they ask. I get messages sometimes, guys that are working at a brokerage and they want to start their own brokerage, and they're just wondering how the hell we do it. But go ahead. Sorry.
I mean, I think you have some brokers out there. Do I agree with this model? No, just because I think it brings its own problems as the brokerage offering this model. But they do offer models where you can have your own Quebec Inc. You can have your own entity and work within them and use their tools, and you pay a percentage, whatever that percentage is what you work out with that brokerage. There's no profit sharing. There's none of that. But you can build your book like that. Now, when you leave, how does leaving that and starting your own from there? I don't know how that works. But
That
you
was
could
my next
build
question.
up something
'Cause they
if
have-
you do, and then make a move from there. It could have its own roadblocks in the future. but that could be an option. There are brokerage firms out there that will.
Because to my understanding, correct me if I'm wrong, or if, I don't know, maybe you know, or if you try and leave, because they have a right of first refusal.
Right of first refusal, yeah.
So if you try and leave and the owner knows that, let's say it's, most of the time it's 50-50, right?
Yeah.
So you come in, you eat what you kill, come in, they don't pay you, they go, we'll split it 50-50, you don't sell anything, you're not going to make any money. But if you sell stuff, we'll split everything 50-50. It's actually a pretty good deal, and you'll own your book.
You own your book.
Yeah.
But owning your book at this cabinet.
I don't know what that's it. So what's the step in terms of saying, okay, now I want to go and start my own office?
Because some guys do it.
For sure. And I've seen them leave. I've seen them leave too.
I don't know the answer to that.
I don't know the answer to it. There's a little...
Like if it's a well-run brokerage that does that, and especially the owner is going to know what the profitability on your book is. You have a fucking profitable book. He's going to make the offer.
But what happens if because what happens if he can't afford it?
Yes, that's true. That's
So
true. What happens if it's bigger commercial accounts? Yeah.
Mm-hmm.
What happens if it's bigger commercial accounts and he's like, "Fuck, I'm going to lose probably half of this." Okay.
Could be a way. Could be a way.
Interesting.
Because if you're just kind of saying, okay, I'm going to open up, start my office in a WeWork or whatever, and here we go, rock and roll.
Yeah.
I'm going to call up all the insurance companies. Fill the piss and vinegar, let's go. Yeah, they're going to say, buddy, you're $50,000 in premium a year. I'm sorry, it's not going to cut it,
Yeah.
So they'd have to go through a banner. We know a few banners that you can start through and go that route, but. Problem with the banners sometimes, and I'm not gonna name names, but there's some where it's very, very difficult to close a policy.
Yes.
It's
highly inefficient.
Highly
inefficient.
Some work done there, I think.
Yes, I would totally agree.
Because they are helpful. I'm not gonna say they're very helpful.
Yeah.
The issue though is that people want things fast.
Yes.
That's technology has created that from the consumers.
Mm-hmm.
They are moving. They're moving quick. It's not, okay, I'll get back to you in 3 weeks. They're gone. They're already speaking to 5 other brokers.
One of our salesmen here, Mike, used to work at an office where the personal lines was through a banner.
Oh my, okay, yeah.
And so, bro, you couldn't do anything. It took anywhere from 2 to 4 days to get any type of transaction through. 2 to 4 days. He wasn't able to give prices to people on the phones, obviously, because it takes 2 or 4 days. So you call your current client at KBD. We deal with the banner for your home and car insurance. You call and, okay, I'm getting a new car. What's the price? I'm picking up today. Oh, I'll tell you in 4 days. It doesn't work.
So then, but what are you doing? They're like, and it puts you as the broker in bad spots.
Yes,
because if you're going to succumb to that pressure, now you're doing something that could fall into your E&O.
Yes.
Yeah. And that builds, and it's just a lot of pressure. Plus, it creates a backlog.
Yes.
If you got all these people calling you wanting quotes, this and that, and now you're waiting on friggin', 20, 30 quotes, I mean, that's stressful.
Yeah.
I got to call this person. I gotta get
Add everything up. I think it comes up to the end. At the end of the day, it's really hard to start on your own.
Yeah, it is.
It's fucking hard. I salute.
It was hard,
I salute
man.
you guys.
It was hard even the way that we did. I mean,
but it was hard. But we had leverage. We had volume. I mean, I think honestly, because I've seen it happen in my previous life, and brokers that were starting from scratch or very, very small volume. The situation is that they start, and like I was saying previously, where they'll run into a wall in terms of getting insurance contracts. So let's say if you're lucky enough, you have 2-3 insurance companies, and you add on top of that, you're with a banner. So I mean, you could start, you could get going, but at the end of the day, when you're comparing yourself to all the other brokers, they have 25 insurance companies. They're dealing with all these MGAs. They have insurance companies that you don't deal with because certain insurance companies, they only have they only deal with 200 brokers in Quebec, let's say. So, I mean, at the end of the day, it's very hard for you to compete, to continue compete after 5-10 years. Those small brokers firm, they either go and they'll attach themselves with a bigger firm though, which will because some of them they actually approach us. You know,
they've approached us,
they've
yeah.
approached us and they've just
Bigger
like,
brokers?
bigger brokers from just
And what did they ask you?
they just will try to seduce you, just saying they know as a small broker. They'll tell you, well, listen, we'll take care of all the administration stuff. We have a very large market. I know you guys we're in we have a lot of volume in commercial. So they'll try to seduce us saying like, well, you probably all don't have these insurance
We have
companies.
markets,
We
yeah.
have markets.
Yeah.
So they're trying to seduce you in a way that like, it's going to be easy
To make it look sexy.
to make it. Yeah, of course.
Take out for a nice dinner.
Yeah, that's
Exactly,
it.
but
Wine
then
and dine you.
at the end of the day, it's
Kiss you on the cheek.
they take a piece of the pie too. So and you
Yeah.
have no profit sharing. So is it really what you want? I mean, you came into the game,
But when they were trying,
you-
when these brokerages are making these pitches, are they trying to take an equity stake in your business, or are they trying to just offer you markets? Like, what I don't
If they're
understand
not-
fully what they're trying to do.
it's definitely the ultimate goal. So
Yeah, it doesn't start.
they'll
as that.
seduce you to tell you how basically they want to be your friend, and then we'll give you all this market and help you with the management. But then eventually, I mean, they're not doing this for free. So
No, of course.
Yeah.
I mean, it could start by giving a cut to like a percentage on your business. I mean, not on the business, but on the volume, the new business or the existing business. But then after that, I mean, it definitely goes a lot more deeper in a way that they'll take a piece of the pie for it. So, and I mean, it's totally fair. I mean, they're helping you out to grow, and then eventually, you know, I mean, I found it fair. But if you're thinking about, like, let's say leaving a big broker firm to start your own, or just leaving school to start your own broker firm, I mean, it's hard. It's hard.
Very hard. Let's switch gears. Aggregators. I know you want to talk about this. What's your opinion on aggregators?
Well, it's definitely a new way to help you grow. I mean, I don't have anything against them. I mean, I actually like what they do. They brought up like some new ways to get business in a very traditional market. So yeah, I definitely like it. But it's just, as a business owner, I think what's most important is basically to understand that type of clientele that's
that
coming
you're
towards
getting
you.
from the aggregator.
Because you could definitely compare your referral or your existing business retention versus the retention or the clients that are coming from these aggregators. It's definitely not the same.
Is it better or worse?
It's worse.
It's worse,
Definitely
yeah.
worse, because it's
Interestingly enough, I actually have some. This happened by accident. So, I can see I have $1.5 million in premium with all the data. So that's for leads and clients that came from online.
Okay.
Okay, and it's accurate data. I can see the loss ratio. I can see everything.
Oh wow.
Yeah. It's I'll tell you the details after, like how it. Well, it's actually a fluke how I got it, but so $1.5 million. It's big enough sample size to give like a pretty good idea. The retention's 5% lower than the rest of our book, and the loss ratio is about 15% higher than the rest of our
That's
book.
not bad.
Well, it's bad. It's the book itself is not profitable. If you have a 75% retention,
No, but I thought it was really worse, to be honest with you.
it's not as bad as you would think. But if you have a 75% retention, after 4 years, the client's gone.
Gone. See you later.
yeah.
And then on the loss ratio, it's like most of the time you're not really getting profit sharing of that because it's just not a profitable book. So when you actually factor in all of the other costs, because you have to pay for the broker, you have to pay for their CRM, you have to pay for their space in the office, you have to pay for this, you have to pay for that.
Yeah.
So when you actually
Not
factor
profitable.
in, you have to pay for the lead. When you actually factor in like all of the costs, it's marginally profitable. And then it just gets you back
Okay.
onto that hamster wheel that we were talking about earlier. It's
Yeah, because you constantly have to keep.
it's
in
a
order
tough
to, yeah.
business model to grow,
Yeah.
and like this is why I'll go back again to kind of the mergers and acquisitions play, the private equity play, or the broker links and all those guys. When they buy a book, especially right now, but they've always been like this. When they're buying a book, they're buying, generally speaking, it's got high retention and it has high profitability, good
Yeah.
loss ratios, and when you have that, I mean, it just makes so much more sense. Like these guys, their retention's really good in most of these big brokerages. And it just makes your job a lot easier. It's a lot easier on the brokers. It's a lot easier. Like when you have a shithead calling for
Well, especially if
about
it's
his
like
$200 car insurance policy, you're like, get the fuck out of here.
True story, though.
Yeah. Shamar, tell us about your experiences with that. Shamar was a broker for a couple, so he knows the drill.
Well, and it's okay. Every now and then it's fine, but if it's if that's what your day is basically made up of, you're starting to question your job a little bit.
Yeah.
It's just.
But I think you need both, and you cannot you can't just leave it aside. Considering even though like you're putting a lot of money, it still brings client. It still
how much money
grows
though
your
are the guys
business.
that are growing on? I don't work with aggregators anymore. How much money are they actually making?
Oh,
Because I've done the math.
tell you.
I've done the math myself. We used to work with Lowest Rates. By the way, like they were a great company to work with. It's not their fault the type of lead that comes in online. And there are good leads that come in online as well. There are just not as many as.
And how do you can't really, it's impossible to know when those leads are coming, right?
But
It's just kind of
but I used to see the bills. So we'd have 40,000, 50,000, 60,000. I think one month we had $70,000 bills for
It's
leads.
extremely expensive,
70 grand in fucking bills. And so if you're growing, it's the hamster wheel. So long story short, there's no profit to be made on that book because it's not a stable book that you can keep for a decade, let's say. There's no profit to be made. And if right now insurance companies want profit, they're basing the value of your brokerage off of your EBITDA and not just your commission revenue. For me personally, I think like these aggregators, for any broker that actually understands how they work, it's not a good business model right now. You have to go take a loan. Like if you really want to scale up, like the guys run Click Assert and all that stuff. If someone's buying like $500,000 or $600,000 or $750,000 of leads a year, I know the math. There's no fucking way they're making profit. They're not. They're not making profit on that. I guarantee you.
that you're saying year one, of course.
No chance.
Year two,
no chance.
year three,
no.
they're leaving. They're going back in the wheel.
They're not. So it's like there's
because of how it's destroying
like
your loss ratio and as well as the
there's
retention.
a whole pile of things, but it's just
And the
so
overhead?
expensive. Like for us, when we were doing Lowest Rates, it was about when I'd run it on good months, it'd be like 2.5 times commission. That's just commission. This doesn't. So if we made $100 on the sale and commission,
Cost you.
the leads would cost us $250 for that. That's not even factoring in the brokerage, it's not, the broker's salary. It's not factoring in a lot of those things. So you're looking at like 4x.
So what do you see as a difference between using the aggregators and what you're? Because I guess right now you're
I don't believe in aggregators.
No, but like before, you're saying you were using lowest rate, and I guess right now, you're just investing in your own business, in your own brand.
Well, and the other issue with an aggregator, it's like a lot of people. Number one, I taught myself how to do SEO, and even then, it's like it's a compliment. It's not. I don't think you should base your business around SEO only. I used to think, yeah, you should. I've learned I don't think that it's a nice compliment, and then so there's that part there. And what else was I gonna say? I completely forgot what I was gonna say.
You were talking about the aggregators. No, I wasn't.
Oh
no, basically I wanted to know: do you have enough data to compare like the investment you made in your own brand versus what you were getting?
Yes, sorry.
In the aggregator.
So
I'm sure you do at this point.
I have a lot of data. I'm not going to bore you guys with the data, but the other issue I had just more from a marketing perspective, which I think is like for me it was a little easier to understand. If someone's going on Lowest Rates, or someone's going on Click Assert, so they're going to, let's just say Click Assert, they have a really good brand recognition in Quebec, and they do a good job. They have a good website. They're a good company. Let's be honest, they are.
Yeah.
And so, but the user goes to Click Assert, they get the insurance most of the time. Let's say, well, not Intact anymore. Let's say they get it with Beneva, okay? So, or they get it with Lunic. So they go from Click Assert, and then they're insured with Lunic. The user, the new client, they don't know who the brokerage is.
No.
It's confusing for them. They're like, hey, I went to Click Assert for someone who doesn't know anything about insurance. I went to Click Assert, and then now I'm with Lunic, and then there's this broker here. Who am I insured with? And most of the time in Quebec, the insurance company is going to dominate the brand. We can all agree there. Like Desjardins, Beneva, Intact, Bel Air, they all have way better brand recognition than any brokerage that's in Quebec.
The budget is
right. So from a user perspective, They don't even know who the fuck they're insured with in terms of the broker.
If
And on top of
anything,
that,
they think they're
Click
insured
Assure-
with Click Assure.
Yeah, exactly. And Click Assure, a lot of times, I know Lowest Rates started doing this. I know Click Assure, I'm pretty sure they send an email to the user every year.
To get them back
get
into
them back.
the hamster
Yeah.
wheel.
Yes. And the only reason Click Assure is around is because Lunic owns them. That's the only reason they're around. Because all the other insurance companies,
Because they can recharge that client then, right?
like, what do you mean recharge
Well,
that
it's,
client?
it's another lead
Yeah.
that they're charging someone for.
Yes, but it's like, so Intact doesn't deal with Click Assure anymore. You can't get a quote with Bel Air through Click Assure. You can't get a quote with Desjardins through Click Assure. There's like all
So
these
they're
insurance-
basically just recycling people.
Yes, and it's basically, so there's Lunic, Beneva, Promutuel, like 2 or 3 Optimum, I think. And there's a couple, so it's but they're not getting the big markets. They're not getting Desjardins, Intact, Bel Air, and I think there'll be even less. But if Lunic didn't own Click Assure and Beneva owns Lunic,
Yeah.
I would think there's no fucking way Beneva would allow them to be using their quotes either, because everyone saw what happened in the UK when Intact bought RSA. And the aggregators dominated the market. There was no fucking money to be made in home and car insurance. Intact, in fact, pulled out of car insurance in the UK.
Yeah.
They're gone.
It's
because
crazy
the
how big
aggregators,
the aggregators are in the UK.
they're massive,
Yeah.
and the retention was at like 50%.
It's terrible.
It's bad
Because
for
that's the
50%.
mentality that they
Yes.
have out there. In the UK, that's their mentality. It's
Yes.
just everybody is using the aggregator.
Yes, but it's less expensive for the consumer at the end of the day. I mean, they made it so easy
That,
in the UK. I was speaking to a gentleman.
No loyalty.
Well, because it was so easy.
Yeah.
So you could literally get a quote. So let's say you went on to Click Assure in the UK.
Yeah.
You put in all your data, and then the next year comes up. They'll send you an email for your renewal. They have all your data still. You don't have to re-enter your quote. So if you have no claims, no tickets, same car, same address, well, yeah, why not? Fuck, I could save an extra
They'll
50
just tell
bucks.
you, like,
Takes
switch insurance
takes you
company.
Because
5 minutes.
you're already in that.
Yeah.
So what's it to you? That's how you,
Yeah.
you
Yeah.
think that's how
So,
you're.
I mean, from a consumer perspective, it's fantastic. But what ends
As
up
a
happening,
business.
but a lot of insurance companies saw that there, and they're like, "We're not down with this." Why do you? Why do
Because
you?
you're playing hot potato too, right? With the losses.
Yes. But why do you think Intact pulled out of? Why do you think Intact got out of the aggregator market completely right after the RSA acquisition? They saw what was happening in the
saw
UK,
the-
and they're like, "Get us out of
They
here."
saw the numbers.
Yeah, get us out of here. We're not interested.
It
in
makes
this.
perfect sense.
Yeah.
I think it's.
I would've done the same
important,
thing.
too.
I
I
would've-
think it's important too for just the industry.
Yes.
I don't think we want to go there. I think.
No.
No, but the alternative is definitely to invest in your own brand, in my
Yes.
opinion. Because if
Back to the main question. Yeah,
well,
you're right.
exactly. Because
100%, yeah.
after that, if people reach out to you, they know they've reached out to KBD. They have
Exactly.
a sense of
Exactly.
where they're going and
Yeah.
where they're at. And at the renewal, it continue being KBD. It doesn't change anything. So, I mean, the brand, I think it's definitely where the
money is.
the money is
Yeah.
for sure. So of course, and also the control. I think
I agree.
'Cause
You
you're
don't
dealing with
rely
these
on anyone.
Exactly.
Yeah.
You control everything. You control, and these days with the technology, you could end up even controlling which specific client you want to reach at.
Yeah.
You want to reach to. So I mean, it's perfect because at the end of the day, from what I've seen from all this, especially in commercial, but it's just like when you're able to control what you want, it's actually, no, let me rephrase this. It's,
when you can pick your own clients.
when you
I
can
think
pick your
is what
own
you said,
your own
yeah.
client, it's definitely a lot more advantages for you because these days, if you're into the marketing game or the brand game, I don't think getting a lead is the most difficult thing. I think it's actually the most easiest thing to
It
get.
is, yeah.
It's afterwards. It's dealing it as a broker
Yeah.
and dealing it with your insurance company. So especially in commercial right now, because we get a lot of leads, but then if the insurance companies don't take it, then you're not better off either way. So it's I'd rather especially invest into our brand versus in an aggregator.
And I agree. What are you guys doing right now to invest in the brand of Fidelis? You have a Ric Flair. Woo, woo. He's gonna be the mascot.
Yeah, we put it all in Ric Flair.
Yeah.
No,
but
30-second cameo.
Yeah. Are you guys making any? What are you guys doing to try and grow the brand of Fidelis right now?
Not much, to tell you the truth. We're basically more investing in Google Ad and trying to get some visibility.
That's investing in your brand. I mean, the leads are directly
we need to do
you.
more. We definitely need to do more. But I think a lot of it was really just, it's only been 2 years. We had a lot to do on the back end that we've really taken care of and sorted out, and we're really happy about what we've done. And really build our foundation. Now that we feel our foundation's built, we can kind of take those next steps.
But I found it's two different things though. The brand and, let's say, just getting leads itself. I would say personally, my feeling about this is when you're investing in your brand, you're investing in visibility, credibility, and these two
brand awareness.
These two won't bring you a lead right away. It's just a buildup that you see Fidelis in your feed, and then because Fidelis won't know by investing a lot of money in branding, Fidelis won't know when renewals
just cut
coming
you off
up,
there, Andre, just because you said something. You said credibility, and I think credibility is actually super important. And I think that's what we've been focusing on. You come in, we're young guys, we're new. We needed to build that credibility. We needed to build it with
credibility
with
the
clients and the insurance companies, with everybody. Everywhere, they want to make sure that we're paying our bills on time. There's a lot of things there that how we're properly presenting our risks to the insurance company, how we handle our clients, how we, and then on the client side as well. I mean, that was, if we bring it back to how we invested, I think that's where we invested really. It was just ensuring that the credibility that we had with the insurance companies, with our clients, was there. And I think,
So slowly but surely, then you start making videos or podcasts.
Yeah, there you go. I did podcasts. No, but then you know what I mean. Like, and I think it's important that just jump in and start tackling too many things. It's just not going to work out. You're kind of like a chicken with its head cut off.
Yeah.
Do you guys
PG version?
Do you have any plans for investing in the brand? Any concrete plans, or is it just
concrete? I'm not going to tell you this.
Okay.
No, I mean, we definitely do have plans. Concrete plans? No, there's nothing concrete right now in terms of what we have. A few things that we're working on right now that we'll see where it goes. Honestly, I don't. Yeah.
No.
Definitely.
No concrete.
Nothing concrete, but a couple ideas as to what we want to do. But yeah, I'm still working on those things.
But you hit like the. I totally agree with you what you were saying earlier for brand awareness, why it's so important, because like if you're trying to run a conversion campaign on Google and they don't know who your brand is, they're still not going to buy from you, especially when it comes to something like insurance. So the brand awareness, just investing in a message or in whatever you want to invest in, just to basically get your brand out, whatever your brand happens to be. If you're top of mind when the consumer is ready to finally make that decision, that's a great thing. And a lot of times when people for like home and car insurance, commercial insurance as well, not to the same extent, but a lot of times these customers, they'll quote multiple companies because it's so easy. They'll go quote two or three companies. If your company is on the list of insurance companies or insurance brokers, I mean, that's pretty good. You got a 1 in 3 shot of getting this person as a new client.
Yeah.
So I want to switch gears a little bit. So Rob, talk to us about, let's get into the commercial segment of this right now. So how's everything going? Would you, my first question, just to start this off, so for the commercial insurance brokers out there, would you say that the hard market is over?
No, I don't think so.
No?
No.
Okay.
No, I mean, I think maybe it's getting a little bit easier, but I don't think it's over, no.
Okay.
No, I disagree.
Do you think it's not over because of inflationary pressures? Do you think it's not over because the insurance companies still haven't got their pound of flesh from the loss ratios, the money they were losing on claims the past couple of years? Well,
I think it's both.
Not the last 2 years, but previous to that, like the loss ratios for insurance companies was not very sexy, especially in commercial insurance.
I think it's both.
So you think it's like a mix of
I think it's
stuff?
a mix of both. I think some insurance companies are starting to get a little bit more open. We've had discussions with some of them, and they've said, look, we're opening up, we're ready, we want to really tackle these, our limits are increasing. limits. I mean, like capacity is increasing. So you're starting to see it soften, but I don't think, like, I remember when I first got into this industry, I mean, it was soft market, and
dude, it was so hot.
It was rock and
It was
roll.
so cheap.
It was rock and roll.
Yeah.
Man. Like if I got a car, I was like, I got this. You know what I mean?
Yeah.
We're definitely not there. It's still hard. Specific risks for sure.
Like what?
Contractors,
Contractors.
start touching, specialized contractors. I mean, there's like a handful of insurers that'll do that.
You're talking like roofers, subtrades,
yeah, roofers,
stuff like that.
subtrades. That's it. Roofers, plumbers,
Okay.
excavation, depending. Yeah, it's still very tough, man. Transport's always been a hard market there, but yeah, I don't think there's a need right now to change it, and I think with inflation and where the economy is going, I don't think anyone really wants to just shift it to a soft market. That's my opinion.
I think also too for like the insurers where they're having a little bit, because typically speaking, or at least so the last hard market, this was before any of us worked in insurance, was after 9/11, right?
9/11, yeah.
And then so they just all the insurance companies just jacked up their insurance premiums. Everyone was
cut capacities crazy.
Yeah, exactly. They were making piles of money. The insurance companies were like, fuck this, we're trying to make some fucking money, and they did it. But back then, so when the market started softening again, they didn't have this inflation issue.
Yeah.
And they didn't have this catastrophic loss issue either. Like there's more catastrophic losses. So it's like a double whammy. There's more events and they're costing more expensive because of the inflation. So it's like fire, it's like a double fire.
So now you're playing catch up to get that premium.
So it's like this is just why I'm not so sure that, I mean, what the hell do I know? But I'm not so sure that all the companies are going to dive in because they're seeing it, especially on the home and car insurance company side. Inflation and frequency and catastrophic losses, it's really something they have to keep an eye on. Because if you dive into a new market or a new industry, and then you're like, holy shit, they have more claims, and then they're more expensive than what you even thought they were going to be, like they can really get fucked. So I think that I agree with you. I think that the market will kind of stay weary for a little bit. Like I don't think they're just going to jump right back in to go, okay, let's get some business now because you can really get fucked. No one knows what's going to happen with the cost of claims. I mean, it's still difficult to find labor.
Yeah.
The cost of materials is
the
still
duration
going
of
up.
them too.
Yeah.
And just think about that, like rental, like if it's equipment rental, if it's car rental, I mean, now your cost there is higher, right?
Yes.
When you're waiting on parts. So there's a lot there because of the economic situations that make those claims more expensive, for sure.
Do you have anything to add, Andre? Or?
No, I was just gonna say that what my not my opinion, my vision about this, or what I'm
no
hearing.
one cares about your opinion.
Exactly. True story.
I'm kidding.
No. I was gonna say, like, what we've heard from different insurance companies is just they're not opening at large, but they'll just tell you that, listen, if you're trying this sector right here,
Give us a call.
Give us a call.
Like metal workers.
They'll be more specific on what they want, and some of them are still like, "Hey, just send it to us, try us," But it doesn't help us at the end of the day. So some of them are more open to tell you, actually, like, just try us here, or just don't even try us for, let's say, building owners. Like, we won't even try it. So, I mean, you see the opening. But it's still very fragile.
It was like tech. I mean,
fragile.
You remember like insuring tech companies maybe like 6-7 years ago?
On the professional liability side or the cyber side?
Both. Remember how cheap it was?
And easy?
Yeah. It was
Dude,
laughable.
the quote CFC
like
used to give
$3,500, and like the guy who got like $6 million in revenue, he's like, I got $3,500. Like, okay, no problem.
Yeah.
And then it was like,
dude, CFC, remember the app was just like, okay.
It was a page, I think.
What's your revenue?
What do you do? It was like, it had this much like space to fill. The guy's like, I don't know. What do you want me to write in here? Like, I do a lot more than that.
I use a Norton antivirus.
So do you use Norton? Yeah. You're good.
Where do you keep your data? My what? like no one knew.
But that's
anything.
because it was such a new industry, right?
Yeah.
And I remember I was like writing quite a bit of tech companies, and then I don't know. I don't know.
COVID.
Was it COVID?
COVID,
because it was like
there's
120%, maybe even more.
Because
The
COVID,
increase
there were
was
so many,
crazy.
like, because they aggregate all of, one of the underwriters was explaining this to me. They aggregate, like, a cyber loss is a cyber loss. So cyber loss could be a company for some guy working from home where there's a vulnerability in the network infrastructure, or the security, or something like that. So a cyber claim is a cyber claim. COVID, a lot of hackers, like, hey, there's going to be a lot of people working from home, which there was. Everyone was working from home, and there's going to be vulnerabilities in the firewalls or wherever it was. So the claims over COVID, like, exploded. Hackers were having a field day. I imagine how much money these guys were making. And
Put it all in
imagine
Bitcoin.
being a ransomware guy, how much fucking money you must make.
Yeah.
Dude, for sure, man. I mean, yeah, good on him.
And then
I don't know, crazy.
Keeps the premiums high for us.
But it was just like, I just remember, like, it was really, I feel like some of the clients kind of knew, though. They were like, yeah, I don't know how, like, I was paying $3,500 for this. Because it was like, it was tough to have those meetings with the clients, but it kind of passed okay, you know?
Yeah.
You're like, you know, you went from paying $3,000 to around $17,000, you know?
Yeah.
But that's kind of what you were
like
seeing.
this is regular increase right now.
But it made sense because there was a market adjustment needed to be done for that, because it was like, you knew that if there was going to be a claim on an E&O or cyber, it wasn't going to be small.
Are you having trouble selling cyber insurance? We're having a lot of
Yes.
trouble selling
Yes.
cyber insurance.
Yes.
Why? Price, biggest thing.
Price, and people, I think it's just always comes back to, like, the foresight, where it's like they don't see how
the need.
the need for it.
No.
You know,
What's
it's
your-
not like, oh, I'm insured. You know how I used to get a lot of tech companies? They had no choice but to get the insurance for a contract. You know, the new businesses, everyone's focused on something else, which I get. I totally get. You know, you got so many things going on. It's probably, you know, there's 5-6 employees or whatever, and you're speaking directly with the boss, and they've got a million things going on. Insurance is not on the top of their list, right?
not. No.
They know that there's risk there, but okay, I'll deal with it later. I'll deal with it later. Until boom, you're trying to get a contract with so and so, and in the language it says insurance
liability.
requirements. You need $2 million. Blah, blah. That's how I got a ton of business. Was they'd get Rob, like, I need insurance. I need to get this contract, and then boom, you kind of build on that. So if it comes back to the cyber thing, I think it's like they know maybe that there's a risk there. Yeah. Everybody knows that there's a risk.
But then if you're looking at that sequence, you know, they've been operating without insurance for,
nothing
sometimes
happened.
it's like a year, then 2 years,
Sometimes
and
more.
then 3 years, and
Sometimes
then
way more, yeah.
let's say in 3 years they get their first contract that the donneur d'ouvrage is like requesting insurance liability and professional. So it's been 3 years down the line that they have no insurance. Okay, so then they get the liability, they get the professional. So then cyber comes in like third, fourth. So you're trying to explain after that, well, nothing happened for the first 3 years for the liability and professional liability. You're going to tell me something's going to happen to me for cyber in the next 4 or 5 years. So it's, you know, the delay between, or just what they're thinking is just not there yet. It's not a need.
Or it is, and it's okay, I'll take care of it. And then, you know, I think it's something as a broker that you kind of have to be a little bit pushy on it. Not
On
like
cyber?
Respectfully, obviously,
Yeah.
you know, like, because at the end of the day, it's up to the client. If the client doesn't want it, well, that's that's their prerogative. They don't need to get it, you know?
Yeah.
But, you know, sometimes even as brokers, maybe we present something to the client, and then, okay, well, I've presented it, and that's it. Well, no, you can follow up with them. You know, they're working on other things, you know? They're not just waking up thinking insurance, right? So maybe you set a follow-up and say, okay,
It definitely is a much tougher sell, though, today.
It's a tough sell,
because, like,
for sure,
especially if you're going to go, let's say the guy's already paying 30, 40, 50 grand for his insurance, and you're coming up to him with a cyber insurance quote, and it's another 10 grand. He's going to go, buddy, I'm good. Thank you.
Yeah.
You know, that's
where you need.
That's most people. Doesn't matter what the sales pitch is. I had a guy once. We had a client.
Well, yeah.
He had his operation. They had operations across Canada, and the hub was in Montreal. They had 6 or 7 offices. Anyways, I think it's like 7 offices, province across Canada. He was a distributor, and we went up to him and said, "Hey, your cyber insurance." So I asked him a question: Where's the hub? He goes, "Where are all your servers?" Montreal. Okay, everything's here. Yeah. What happens if you get shut down here Like if there's a ransomware attack or whatever, network crash, whatever the hell it is that happens here in Montreal, can your other locations operate? No. So you're telling me here, if there's a ransomware attack on your servers here, they were on premises, the servers here in Montreal, that your business, the whole entire business Canada-wide stops. Yes. He still wouldn't buy the cyber insurance policy. And it was like $6,000. And funny enough, he actually had a claim. It would have been an eligible claim, not for a ransomware. There was a electronic theft of funds. Literally 3 months later, 60 G's.
Oh, jeez.
Calls me.
10x the premium.
Well, he calls me. He's like, hey, and he knew. I'm like,
am I covered?
Am I covered? I'm like, no, you would have been. He's like, yeah. Okay.
Is it too late?
Yeah.
Can I backdate it?
No, he was nice about it. He was good about it. He knew.
I don't know if, okay. I don't know. I think most people now, after all the situations in the news, are more open to paying more for it. Honestly, at least what I've seen, it's not like a hard no just because of that. I think people see the need a little bit more.
Because for us, we're not. It's like, but like, have you sold any new cyber insurance policies this year?
This year, no.
Yeah,
most of my tech clients have it already.
Okay.
You know.
But also too on the tech insurance side, like a CFC, for example, they throw it in, they throw in ransomware and stuff like that. So if you already have the E&O, you're in the tech space, it's like an add-on. It's already in that family. You know what I mean?
Did you sell something for the lawyer?
Yeah, that's true. I did actually. I did actually.
Yeah. Okay. Well, lawyers should have got a lot of data. Like for us, we have a cyber insurance policy. I mean, we have a lot of data, so it's like
you have servers.
Everything's cloud.
Everything's
cloud.
More than
exactly.
one
Cloud. Yeah,
everything's I sold a couple actually.
Yeah?
Yeah.
Shoulda. No, but I mean, even like what you were saying that like you like, because sometimes you could have a sales pitch of like the cyber risk or the cyber coverage by just explaining it to him. You could have that approach, or you could have an approach of just like going directly to like, okay, well, what if this happens to your firm, and still you won't even take it. I mean, sometimes you did your job, you just put your notes down and you try next year. So, it's the follow-up is pretty much, it's key.
What's in store for Fidelis over the next 3 years?
Huh?
What's in store for you guys?
What's in store?
Yeah, I want to this last section. I wanted to kind of talk about just because you guys, it's good. I like having. I've had Rob on before. We're good buddies, and you're my friend too, Andre. But
who doesn't care about my opinion? But
but no, a lot of people, they're always thinking about starting their own brokerage. So you guys started your own brokerage 2.5 years ago.
Yeah.
You've hired a few people. You can kind of elaborate on that. But like, where are you at right now, and what's the plan for the next 3 years, 3 to 5 years?
3 to 5 years.
Yeah.
Well, it's quite. Actually, this year was very important. I think this for all businesses, all business owners. I mean, we've pretty much like we solidified like the base of like the home. So we were like, there was pieces missing that was enabling. Yeah. Can you say that?
Enabling, like that was stopping you?
Yeah, that was stopping us.
Preventing
to like. So we fixed all those small problems. So I mean, before we could even think about like what's the future, I think this year was really a good year that we fixed all the problems. So for next year, it's just basically the majorly will be definitely our growth organically or by acquisition if we're lucky. Then branding, definitely it's going to go into plan, and just building our own values. To, like building a business. It's just this hiring more
and
culture
people
and cultures. Yeah, culture was more what I was
culture's
looking for.
Culture's like, we just hired a guy who he's starting next week or 2 weeks. He straight up said, so he's from Beneva. Went to the office 1 day a week. Didn't really know anyone there. He straight up said he came here. It wasn't so much he didn't mind the job. Wasn't really a big salary move. I think it was almost lateral, to be honest.
But you're saying you're saying he was once a week at
Beneva. He had to go into the office once a week, and then the other weeks everyone was working from home. But he came here. He's like, I want to work in the office. I want to be around people. I want to be around a culture.
Yeah.
Mm-hmm.
And I think a lot of people, the people that you want to build a business with are those types of people. It's like, there's nothing wrong. We have some people that work from home, and most of them, 99% of them, are actually very productive working from home. But for people where everyone knows my opinion on work from home, if you want to have the people that want to build a business, they need to be in the office. Like anyone who's like, oh, I want to work from home. Oh, I'm really invested in helping to build this business. Bullshit.
I don't think that's it. I don't think for where we're at, that's not, and like you said, there's nothing against that. I totally understand that, especially everyone's, whatever's going on at home and however things work, like totally understand that. But for us, in terms of where we want to bring our business and building our culture, it's really important that people are coming into the office more than they're not.
Do you think
it's okay,
people,
once a week you're not in the office, that's fine. But yeah.
Do you think people, because like it's just a constant theme that insurance brokerages, Canada as well, there's a lot of other industries, but it's like we're lagging behind the US in terms of bringing people back to the office. Why do you think insurance brokers are having so much trouble bringing people back to the office, and us included? It's just like, dude, we have this big space. We have a 10,000 square foot space. Bro, 3 days a week, it's fucking empty. It grinds my gears.
Well, for sure, yeah, because that's a lot of costs that are attributed to that, right?
No, but it's just it's also like, I don't know, maybe it takes more time here, or we haven't.
Sorry, let me rephrase the question. So, like, why do you think we're having trouble bringing it back? That's not completely fair. Why do you think people don't want to come back to the office, and specifically as an insurance broker?
I think they're stuck in their comforts. I mean, it's very comfortable working from home. I mean, if you have kids or whatever the situation is at home, like it's comfortable. It's nice. You don't have to deal with the traffic. You don't have to, I think a lot of it has to do with that. People have really, the situation in the States and the situation in here with dealing with COVID was very different as well. I mean, a lot of people were at home for a long time. They got comfortable. They got set up with that. However they're dealing with their kids or their significant other, or their freaking animals, I don't know. They got real comfortable with that. It wasn't the same situation in the States, Everything was locked up. So a lot of people, that's what they're used to now. That's what it really like got solidified, And you had a lot of people when was the last time they had to freaking deal with traffic for 5 days a week,
Do you think this is good for Canadian businesses in general moving forward with regards to productivity? I mean, there's like a big recurring theme right now that a lot of people are starting to talk about in the media, in the financial media more specifically. Canada, we keep falling further and further behind in terms of productivity in comparison with the US and in comparison with other companies too. If the country as a whole, this isn't just insurance, if the country as a whole continues to fall behind in productivity, our standard of living drops. Productivity is what pays for a welfare state.
I mean, I think anyone can agree. I think everyone would agree that the answer to that is like no, right? I mean, it's. I'll give you an example. I mean, just dealing when you call insurance companies.
It's longer.
Some of the MGAs. There's no receptionist anymore, right? It's not look, I mean, whatever, I don't know what it, but it's long now, and it's very difficult to get in touch with an underwriter.
I agree. It's all email.
But the thing is that I send you an email, you're going to get back to me when, right? You're not going to get back. Well, I used to be able to call a receptionist. The receptionist would then get me in touch with the underwriter, and now I'm dealing with the problem right away. That's not really happening anymore.
You can't get them on the phone.
Can't get them on the phone.
How often does it happen where you're sending a commercial insurance risk? Guys, and if underwriters, if you're listening, like listen up for this. How frustrating is it when you send in a risk, fully completed app, take your time, call them because you're like, hey, nice risk, I like to write it. And you just want to get them on the phone. And then they don't answer your call, you leave a message, and they send you back an email. It's like they don't want to talk to you. It's like, what happened to the days?
Honestly, though, like if you're sending me an email, but it's like quick, I'm okay with that. Look, you're busy, but as long as you're dealing with it, I agree with you. I know what you're saying.
It's just that human aspect, though. Like if you're writing like a bigger account that's more complex, it requires some explanation, a dialogue between an underwriter. Yeah, in my opinion,
it's just so much easier.
And it's just
you're right.
It's
you're
easier.
Right, sure.
You build a better rapport. It's just a human interaction. And underwriters, I feel like there's a lack of that. Some insurance companies are worse than others. Yeah. But the other day, I'm trying to write a nice account, and it was so refreshing to get the underwriter on the phone, and she was like, yo, I'm down to help you with this.
And then you're going through the risk together. You're explaining everything. Yes. I mean, because now they can fully understand the risk as well. Yes. Whereas sometimes, like it gets lost in.
But more so just than that, more so just understanding the risk. It was I want to help you get this. I also want this.
Yeah.
Whereas a lot of times other underwriters, it's not easy as an insurance broker, as you guys know, to build a business, especially in commercial insurance.
Yeah.
It's a tough market out there. It's very difficult to get new clients. Very difficult. It's very hard. So when you're sending in a completed application, I mean, I understand that some insurance company, you have appetites. I get that. But when you get a half-assed, here's your price. Like they literally go to a matrix, type it in, okay, here's your price. You try and call, you try and negotiate. No, that's your price. No, it's like they don't give a shit.
Hey man, at least you got the price. No, but for real though, sometimes.
But it shouldn't be like that. It shouldn't be like that.
Yeah, but I think a lot of it comes back to the productivity that we were discussing, in the sense that if you have all your people working from home, it's like, how do you really know what the situation is? Like, are you even really like fully monitoring that? Like, what's going on?
They can't.
That's
There's
it.
no way.
There's no way.
No way.
And if you are, and it's like you're trying to implement like faster response times and this and that, but everyone's at home, I just don't fully believe you can achieve that.
I agree.
To its fullest. I don't. And then if you were comparative, everyone at the office, you can see it firsthand. Like, look, like so-and-so, it's not getting done the way it should be getting done. These calls are coming in. Nobody's answering them. It's right there. It's right in your face. Mm-hmm. And you can go get up and go speak to the person you need to speak to and say, hey, like, did you get this file? What's going on with this file? Like, now it's, I got to email them. I got to on Slack or whatever. And like, hope, I don't know.
No, I agree. I agree.
And then now it's like, it's next week's problem.
You call them, they call you back 10 minutes later. Oh, sorry. It's like, yeah, sure you were. Like,
I mean, some people can, the thing is that there's some people that can actually do it well.
Yes.
And they take it seriously and they do that well.
Yeah. There's a lot that don't.
But you're putting a lot of responsibility out there, and I think it doesn't always come back the way it should.
So I think it's fair to say we're all on the same page. I think a lot of other entrepreneurs in different industries and insurance, whatever you want to call it, I think we all agree that if we were to place a bet on the companies that are going to be more successful moving forward over the next 5 years are going to be the companies that place more of an emphasis on culture. And the only way, in my opinion, to improve the culture or build upon a culture is to have humans around humans, which means you got to be in the office a certain amount of days per week. Would you agree with that? Like,
yeah,
you got to get.
No, I definitely agree with that. I mean, isn't it like Facebook that
every tech company did it? Apple did it, Facebook did it, Google did it, Amazon did it. Like Amazon, straight up, the CEO, I think he straight up said, a lot, and other ones have done this too. You're not in the office 3 days a week. You're out of here.
But then you see, because you have other people who switched jobs during COVID. It's not like I've never even met my team.
Yeah.
Yeah, true.
I mean, you guys
crazy.
are working on stuff together. And it's like you guys never even met. You've never even gone to have a coffee together or have lunch together and just talk about things other than work. Like
crazy.
Yeah. There's no connection there. I don't know, man. Like I think I used to like that about like, you go have lunch, you walk around or whatever. Like that's a nice part of it.
Yeah.
That's a nice part
we still like that. That's my favorite part of the job.
Exactly.
The schmoozing is my favorite part about insurance. You go for nice lunches, you go for like a dinner, you speak to the guy. It's just
and get to know the people that you're working with. You spend a lot of time with these people.
Yes. No, I completely agree. I think that, the companies, the insurance brokers that do capitalize on this, that get more people back into the office, I think are going to kick ass over time. It's just going to compound. But even like, let's say, for example, because everyone goes, I'm just as productive when I work from home. Some people are. There's a lot of, I'd say most, in my experience, are not.
Because your head... Sorry to cut you off. Sorry.
Go. Continue.
Your head, like, you're at your house,
Yeah.
I don't know if you have a dog or a cat or something, your friggin' dog's eating your friggin' couch
laundry.
or something.
Yeah.
Or like, oh my God, I have laundry, I know it sounds super cheesy, but like...
It's true.
No, but that's what's going on.
Or if you have kids.
It's
if you have kids... I mean, you think a mother at home with their kids, you think she's going to be focused on work the whole time? No. Like, no chance.
No, or like, you're like, maybe I'll go pick up the kid a little bit earlier from the daycare,
Yeah.
Instead of picking them up at this time, you're leaving at 2 to go pick them up, and now your day's cut, but you do that every day, and it cuts around 12 hours out of your week.
So saying all that,
man. But like, it's the people, I think the companies that bring people back into work, even if it's like a 5% extra productivity per year, 5% compounded over the next 10 years per year, compounded, you're going to be fucking dominating the other companies that believe in this 100% remote work from home bullshit. They're going to get fucking ran over by the other companies that actually bring people, and the culture of people. Because like the other thing too, I think just kind of adds on to it. If you're forcing people to go back to the office a certain amount of days, the people that are going to be attracted to that, it's a certain profile person that's down with that. Chances are they're going to be motivated already. They're going to want to build something. They're going to want to work with other people. So just by having those types of people around, you're already winning.
Yeah.
Because it's like they're probably going to be a team player. You know what I mean? Because they want to be around people. They want to advance their careers. They want to,
Yeah, well, these people will be like your, how do you say, the ambassadors, you know?
Yeah, there was a term, cultural co-founders.
Honestly, that's very...
I cut you off, but go ahead.
No. I was just going to say, we're going to the same place. So like these ambassadors, you need them because as the manager, the business owner, you have like a speech, you have something to say, but like sometimes you need within your own companies, within your employees, you need one of those like ambassadors that are at the same level, let's say, or doing the same thing to like encourage the other people to like, hey, just come on, we'll go for a drink or we'll have a nice lunch, and it's a nice atmosphere to have at the office. So you need like it's a huge mix of just having communication, just very up to down from everybody to have at the end of the day a good culture, good atmosphere at the office.
I agree. I think it's a good place to end it.
Yeah.
Rock and roll, baby. That's showbiz.
That's showbiz, baby. All right, Fidelis Insurance, Andre Laurent Jr.
Thank you,
Got
sir.
the junior this time. Rob Farrar. Check him out, Fidelis Insurance.
Rock and roll.
KBD Insurance.
Double rock and roll.
Yeah, double rock and roll. We're actually competitors. See, as competitors, we can speak nicely to each other.
Yeah.
Freemium Podcast. If you guys liked it, I always forget what to say here. Smash the like button, subscribe, check us out on YouTube, check us out everywhere.
YouTube.
Thank you. Yeah, check us out everywhere. Thank you very much. Have a good one. Thanks, boys.